Welcome to Business Decoded with Ronnie Spellman. We crack the code so you don't have to.
Welcome to the Business Decoded podcast with Ronnie Spellman. I am delighted to have Phil Calandra with us. He's the founder of True Wealth Advisors. And as I speak to business owners around the country, this is someone that can really help you understand how to build the cash flow that you need. I hear about so many companies struggling with their cash flow and how to build revenue. And Phil is here to help us understand it. Phil, welcome.
Hey, Ronnie, it's good to be with you. Thank you so much.
Now, Phil, I have to tell you this real quick. I try not to give my own stories too often because you're the special guest. But back in the housing crisis, I had a good friend that was telling me about a conversation he had with a friend of his. And the friend asked him, how do you know if you're making money? Because the world was changing really quick. And the friend of the smaller company said, I know if I'm making money if I look at my bank account and there's money in it. So he hadn't really factored in any cash receivables. Anything. He hadn't factored in any AR or AP or anything. And so you're here to help us figure that out, right? And really understand what we have in the bank.
That's exactly right. And I tell this story now. It was painful for me to talk about this for a very long time. As a classically trained Wall Street advisor, financial advisor, I was embarrassed. I felt like a fraud for many years. But during the great financial crisis in February, March of 2009, it was a very, very difficult time. You and I were talking pre-show about that. And I sat at my desk one night and I just started crying. My hands were in my face. I had 8 cents in my business checking account and the payroll was due the next day. And my mother's name was at the top of the payroll. She worked for me on the front desk. Now, this was especially embarrassing at the time because the year prior I made $1 million net revenue in my practice. And I struggled so hard with that. But we know now what we went through, right? You in the whole home building industry, right? As a financial advisor, the credit markets froze. The S&P 500 dropped 57. We had Lehman go under. We had Bear Stearns go under. Washington Mutual collapsed. The credit markets froze. So literally 50% of my revenue that was tied to investment advisory was gone. Well, when that happened, the expenses didn't stop. The marketing budget didn't shrink. The payroll didn't go away. And it basically took me as an entrepreneur, a small business owner, into the depths of hell. And from that moment on, I was searching in my own business for the ways, the strategies, the things that I never were taught. By all accounts, I had a pretty successful investment advisory and insurance agency. But then how does someone end up with 8 cents in their account? So from that moment on, Ronnie, I just dug and tried to understand not the classically trained Wall Street formula that everyone is out there teaching.
Right.
I started building for myself what we call work optional wealth. And a lot of what I teach to our clients, I wrote a book recently. It's on Amazon, The Wealth Creation Method.
I love
everything that I teach and everything that I talk about was born out of my pain, out of that struggle. And the reality is now 85 to 90% of all small business fail in the first 5 years. Why is this happening? And it's because there's a structural problem. It's not that we're not smart people. It's not that I haven't figured out how to make money, but I've never learned how to manage and strategize as a founder, as a business owner. That's why people are failing at business. The system and the structural financial system is not really geared towards the founder, entrepreneur, small business. It's a W-2 mindset, the same financial strategies, the same conversations that took place during the Industrial Revolution. It's now 60, 70 years hence. And we're still talking about the same things financially, and it's leaving people behind, and it's causing this massive crash of business owners that may not need to happen. And that's the mission that we're on at True Wealth.
I love it. And you have to dig more into those details. What's amazing to me is that the financial crisis, the Great Recession in 2008, it's amazing that was nearly 20 years ago.
Can you believe it?
I know it still feels like it was yesterday for me because it was such a painful experience. But like we learned so much in that period of time. For as painful as it was to go through an experience, we learned so much. And it's taking you where you are today and helping other companies. During COVID, I began speaking to different business owners to help them understand what was taking place in their business and how they could survive it. Because for me, it was very similar to the financial recession, the Great Recession. Just
Sure.
how do you work through the challenges that you're seeing day to day? And I know a lot of companies struggle with the cash flow piece. They're waiting for the one check to come in. You've got a net 60-day term or whatever the terms are, and you have to get enough. You have to have enough money to get to that next check that's coming in. And companies struggle. And I was responsible for a pretty big market at one point. And one of my managers came to me and said, Ronnie, one of our subcontractors is asking if we can call the bank so that the bank can release the check. What I realized that we'd pay them. What I realized is that they have a cash flow issue because our bank, we had $1 billion in our account, right? We didn't have any issues paying our bills, but they had at their level a cash flow issue and they were trying to get it released early. And so this is what you're trying to help resolve for these companies. But tell me more about your system and what you're there for. I know that you're trying to connect the dots between tax strategy and business cash flow and personal wealth. Walk us through what that means.
Yeah. So what ends up happening for even the most successful founders, entrepreneurs, is for the first time, many of them achieve some level of revenue success. Let's just call it 7 figures. They reach $1 million. Well, what happens to their financial ecosystem? They have a bookkeeper. They have a CPA. They have a financial advisor. They have a business mentor or coach. They have an attorney. They have a realtor. They have a fractional CFO. They have all of these different what I would call advice givers. And it's not that they're bad at their specialist model, but when you put all those specialists into an orbit, who becomes the bottleneck of the information flow?
Right.
You and I, the CEO, we become our own worst problem because the fragmented financial advice, that coordination gap creates the problem all along. And that's the structural deficiency that most people don't think about. They think about their single lane. So if you have a really good bookkeeper, they're looking in the rear view mirror, just making sure that the month closes properly. They might create some fancy dashboard or spreadsheet, but there's no financial leadership that's connected to the CPA. You meet with the CPA in February or March to prep the taxes for the prior year. That's rear view mirror thinking. So you miss tax opportunities. Then you have the financial advisor that's trying to sell you, Wall Street's creating product all the time, insurance product, mutual funds, index, derivatives, this ETF. So nobody is coordinating this entire financial ecosystem. It'd be like going to Symphony Hall there in Dallas, and you walk into Symphony Hall and you have the string section and the percussion section, the brass section, all looking at different sheets of music and no conductor standing in front waving the magic wand to keep the beat. And it's funny, but that's what we do as business owners. So our solution and the Wealth Ascension system is designed to create the financial ecosystem that removes fragmentation and the bottleneck. And it allows a lot of times for the first time, the client to be able to connect all these pieces in a way that accelerates profit. We look at it as a diagram. If I were drawing this, when I present to groups, think of it as 3 flywheels. The first flywheel is your business. How do you accelerate profit in your business? If you're going to make more money, then what's the next shoe that's going to drop? It's Uncle Sam. He wants his share. So if you make more, you have to learn how to keep it. And after you learn how to keep it, you have to multiply it. So we think in flywheels. It's generate. Use your business as fuel. After you make the money, you have to keep the money. After you keep the money, you have to multiply the money. Because at the end of the day, when you get to be a ripe old age, I've been doing this a while. I know you have too. Why do we do this? We're doing this to benefit our life, our passion, our output, our family, our legacy, your precious daughter, my sons. That's why we do this. So many people identify with their personal identity is their business. Well, the only reason that I'm in business is to provide more completeness in my life. Money is just the tool, but everybody gets really cramped and crowded in their business mindset, and they take their eye off the ball, which is, why did you start the business to begin with? It's because you didn't want to work for the corporate company. I didn't want to work for a big company on Wall Street. I wanted to do it my way on my terms, right?
Exactly. Exactly. So and those are good examples. What's a good, I've read through some of the notes, and you say like your average first year client result is 48,000 in tax savings. Walk us through some of the dollars and cents as examples so that people listening, especially the business owners, can really understand there is real value in savings and doing it the legal way, right?
Yes.
It's not,
So the problem is,
yeah, go ahead, Phil.
So the problem is most accounting function is rear view mirror looking. It's looking in the past. Most CPAs, even good ones, unfortunately, they're completing forms prescribed by the IRS. They're putting the numbers in the boxes and reporting what happened in the previous year. What a lot of people are missing is the tax strategy. What are the things in that 70,000 pages called the Internal Revenue Code? What are those things that we as business leaders, business owners, and high net worth individuals can take advantage of? They're not secret. They're in plain view. Unfortunately, most accounting firms, most CPAs, if you think about it, let's just call it out. Maybe I'll upset some CPAs in your audience, but the CPA makes more money by what? By doing more tax returns.
Right.
Well, they can't prep more tax returns and spend more time with Ronnie and your wife or Phil and Trish. They can't spend more time on strategy if the way they're incentivized is to do more compliance work.
Right.
So that becomes the problem. So for the business owner, for the founder, there could be any number of strategies. Your entity selection, when you start up, maybe you're a sole proprietor, then you migrate to the LLC, and then you should probably be looking at the S Corp election. What is the difference between a W-2 salary that incurs self-employment tax and distributions from your business that don't? Having a reasonable compensation structure. There could be the Augusta rule loophole, putting your kids on the payroll, your spouse on the payroll, tax advantage retirement or cash balance plans. I could go on and on, accountable plan. All of these things are readily available for those that understand the tax code and work from a position of strategy. If you're just filing a tax return in February, March, April, it's too late. The water's under the bridge.
Right. Right.
You have to be doing it on a regular basis. We have tax alignment meetings with our clients quarterly. There are things that you should be looking at 4 or 5 times a year before you even get to the filing season, which is, March of April 2027. You got to be working at that now. And that's why I say in our case studies, a first year client on average will save, the average was $48,000 last year. It ranges from 30 to 100,000 in tax savings, depending on the situation.
Sure.
So that's where focusing on strategy. I give you another analogy. I don't know if you're a golfer. I love to watch golf. I'm not a very good golfer, but the analogy I would give you there is if you could come over here to Georgia. I know you used to live in Georgia, but we rode down east towards the Augusta National Golf Course.
Right.
It's Augusta National. It's in April every year. And I said, Ronnie, I can give you one of two things. I can give you Tiger Woods, Rory McIlroy. I could give you Jordan Spieth.
Yeah, I want Annika Sorensen on my team as well, by the way.
Okay. If I said I could give you Annika's swing or her bag of clubs, which would you take?
Okay.
You take the swing. The bag of clubs don't matter.
Right.
You have to have clubs to play a round of golf. So Annika Sorensen, Tiger Woods, Jack Nicklaus, Arnold Palmer, we're dating ourselves a little. They hit thousands and thousands of golf balls. What makes them great golfers is the swing, not the club.
Correct.
But what we do out here in the real world is we're always looking for better clubs. We're looking for a better investment. We're looking for a better specialist. We're looking for the wrong thing. What we should be doing is honing our swing, which I equate to the strategy. Your strategy to accelerate your profit, your strategy to keep more of what you work so hard to make from Uncle Sam, your strategy on how to build what we call the wealth freedom number. What is your freedom point? It's not about a retirement account, but those are all strategies. Those are all swings, because Annika, Sorensen, she could take a broken twig off of a tree and hit the ball better than I could because she has a strategy. She has a swing.
That's very
So
true.
why do we then run around thinking that we need to buy more financial advice, or we need to buy better products? That's not the best way always.
Right. Now, on that average that you say, somewhere near 50,000 in tax savings, what size and type of company usually is that for you? So what do they typically generate in revenue? Because some listening might not be able to have perspective on that. So is it a
Yeah.
billion-dollar company saving 50, or is it a 500,000 company saving 50,000?
No, in our cohort case study last year in 2025, the average client was 1.2 million in top line revenue.
Wow. Okay.
Our sweet spot for founders, entrepreneurs is $1 million to about 10 million. Those are the people I really am passionate about helping. That was me.
Right.
That was me and my wife before we sold both of our companies previously. That is kind of the level or threshold where you're the most vulnerable.
Right.
Because
And I
of what you
appreciate that.
mentioned.
Yeah, there are over 30 million small businesses in the United States. And my goal is to give them an opportunity to make it. As you mentioned, you pulled up a statistic, over 80% do not make it beyond 5 years. And that's very true. And I agree with you. I'm hoping they're listening to this program and they're finding Phil and they're trying to understand how to make it beyond those 3, 4, and 5th years, so that they can build success. But I agree with you that's a really special group.
Yeah, it is. And the problem in that narrow range is it's a solopreneur. It's somebody that started, they put a lot of risk on the line,
Right.
and they built something. I equate that, I talk about in the book, I call them treadmill entrepreneurs. The treadmill, they learned how to speed up. They learned how to take their superpower, whatever their craft is, whatever the Lord blessed them with, they learned how to make money out of that. And the problem with the treadmill is you can only speed it up so fast before you either A, fall off, or there's a disruption, like a great recession, a financial crisis, like COVID, like what we're experiencing with AI. Either you embrace AI and understand how to leverage it, or it's going to do what? It's going to crush you. It's just a tool, just like money.
It is.
But those entrepreneurs, those founders in that million to 10 million, I just have a passion for them, and I think that we can help a lot of them.
And I do as well. I'm glad you mentioned the AI. I don't want to spend a lot of time on the AI piece, but you're absolutely right. I think as they try to figure out AI and how it impacts their business, I think they're going to struggle with it, and it will crush a lot of them because they don't have the capacity to learn something else new at that size of their business. Because you're right, they're oftentimes the marketing person, they're the finance person. They might have some of these experts that don't live inside the company, but inside the company, they're that financial expert, right? And then they're doing sales, and then a lot of times they're delivering the work as well. Now you think even an attorney, they're defending their clients as an attorney, and then they're doing everything else that comes with running a business.
Exactly right.
It's hard to balance all of that.
And that's what we see in the financial space. Like I equate it to the orchestra. You have all of these different players, different musicians on different sheets of music. Well, you've got to have the conductor. The term we use is chief wealth officer. We look at the chief wealth officer as the person that sits side by side with the CEO and helps them interpret the specialist model so that they get further along where they're trying to go, which I dare say for most people, it's financial freedom, it's financial flexibility, it's financial independence as you define. Because the way you define it is different perhaps than the way I do. Some people might need a net worth of $10 million. Another might be happy to retire or go work optional on $1 million. It's different for everybody. But I think that the connection there is AI. I saw something recently, a survey. 2/3 of the people surveyed were using AI to ask or get financial information. I think that's fabulous. But who's going to interpret the information that the AI spins out to you? That gives me great comfort that I will have a vocation as long as I choose it, because what we want to provide is financial leadership. That's what the chief wealth officer, that's what needs to happen with live professional. I could ask all the legal opinion I want of ChatGPT, but I'm not going to take ChatGPT to the court of law if I'm in a litigation. I got to have a lawyer.
And there are there's that technical side of understanding, so you can understand the law technically, but it's really about applying it, as you've mentioned. And so that piece is so critical. And you're right. I hope that a lot of people aren't just relying on the system to tell them those specific details without having someone interpret it, as you described.
Yeah.
What led you to creating your book, writing your book?
Yeah. So, I always tell people it took me 25 years to live what's in the book and about 16 months to write it. I wanted to kind of put in one spot all of the things that I wish I had back in 2008, 2009,
Right.
when I was staring at that bank account. So we were in a mastermind group, my wife and I, 3 years ago, I guess, 2.5, 3 years ago. And I sat in front of this group of 7 and 8 figure founders. We had 2 exits, sold 2 businesses in 2021, trying to really
Nice.
discover my purpose, what had meaning and purpose for me. And we were at this mastermind, very successful people, 7, 8 figure, 1 9-figure exit, just really
Nice.
great people. And I sat in front of the room and I said, I have a lot of experience. I've led financial structure. I've been a financial strategist, financial advisor. What would be the one thing you'd want to help you financially in your business? And Ronnie, the floodgates, these people just started blasting me.
I love
We
it.
need this. I get struggled with this. My CPA tells me to do this, but my financial advisor tells me that's wrong. And then
Right.
I sat there and I thought, my goodness, this is exactly what I experienced. I have the answer. I've lived this nightmare. I can create a firm, a new structure that would allow people to not have to go through it. So literally the mastermind that we were in became our live focus group. And
Nice.
over the period of about 24 months with this group of people, I interviewed hundreds of very successful entrepreneurs, some that were retired, some still engaged. And I said, what would you want? How could you best be served? And what I wrote about in the book is the wealth creation method was my own experience. And then this focus group of people that kept telling me the same thing. I have a disconnected coordination problem. Solve that, make it transparent. That's the other thing, being classically trained on Wall Street. I always hated the fee model, right? Commissions are not a bad thing, but how do you know the commission paid is in alignment with what is best for you?
Right.
So then we have a fiduciary role in the financial services industry. Well, then you get trapped in this assets under management, 1%. Well, I had clients, 10 million, $20 million net worth with me. How could I justify paying, charging a 1% management fee? It's very common, but it's not transparent.
Right.
So in our business model now, there is no asset management fee. There's no commission. It's a monthly retainer. The scope of work is very detailed.
Nice.
There's no commitment or contract. We bring you value. You pay a monthly retainer.
Nice.
And that model resonated with the type of client that needs the help the most.
And for a small business, having that flat fee model, that monthly model, helps create predictability in their schedule, and their finances, which is just useful.
Yep, absolutely
It's
right.
extremely useful. So where can they find your book? Where can they go to purchase it? Where is it on the bestsellers list? Tell us
Yep.
more about where it landed in the kind of the evolution of your book. That's really neat what you've done.
Yeah. So the wealth creation method, it is on Amazon. You can go there. I think the Kindle version, we did have it at 99 cents. I think they asked me I was just willing to give it away in the beginning.
Right.
So you can go to Amazon. I think if we can put in the show notes, Ronnie, I'll give everybody the link to the ebook.
Okay.
Absolutely. I never intended to monetize the publication of the book. So we can give them the link. There's a lot of book resources. If they'll go to the download, they can download some calculators that go along with each chapter. I created a wealth scorecard. We can put that in the show notes as well.
Nice.
It's wealthcreationscorecard.com.
Absolutely.
And then they can explore for themselves. I think the original intent that Trish and I really had set out for is if we could just point people in a better direction.
Right.
If we can just expose some of the gaps, some of the flaws in the system structurally, we could impact a lot of people. And from doing that, I've been blessed. I get invited on wonderful podcasts and meet wonderful people like Ronnie. And we get the message out.
And I was going to say that's the whole purpose for me, and I'm sure you went through this evolution. It's like you've seen a lot, you've done a lot. How do you help other people through their journey and share that knowledge? Because I don't want to leave without sharing that knowledge and helping people sort through this challenge of building something, whatever that something might be. So I appreciate you writing the book, and then I appreciate your motivation behind it and just sharing information, even if it's a cost to you and you almost trying to give it away. That's a huge benefit to the community. Now, 2 items real quick, if you don't mind sharing. How did you make it through that 8 cents and pay mom? And then 2, I'd love to hear more about your exits, those 2 exits that you mentioned, just whatever you're willing to share that you can disclose. But I think it's so important for people to understand what an exit could look like. But first on that 8 cents, and the whole time I've been talking to you, I met a guy a couple of years ago and we had a great conversation. And he was telling me about his business journey. He said, Ronnie, he built a company. I think it was in oil and gas at the time. He built it. He did incredibly well. He had a boat out in Florida from Texas. He had his Lamborghini. He was doing well. And I think he thought it would stay the same way forever and that he would grow on it. And it didn't happen that way. He lost everything. And then he built another business and he made that successful. And I think he lost everything again. There's so many entrepreneurs that have gone through that cycle. And I think you pointed this out earlier, it's not a fault of their ability as it is just a bunch of different conditions that all convene at the same time. And so it made me think about your 8 cents. What happened the next day and how did you recover from that?
Yeah. Well, the first thing I would loop back is you can get lucky and make it. You can't get lucky and keep it.
Right.
So there are a lot of people that are very fortunate. They got lucky, they made it, but if they were lucky, they can't keep it.
Right.
So when I went through that personal ordeal, it wasn't that I had a lack of knowledge. I would tell you I was probably the smartest financial mind in the room. I didn't have a lack of knowledge. I had a lack of structure and execution. So specifically, I had a home equity line of credit, like many people listening have probably tapped into. I used that. I did make the payroll. Mom did get paid. I did not. I was, the one that got left out of that particular payroll.
Right.
The market did rebound, fortunately for me. And this is luck. The bottom of the financial crisis was March of 2009. And this happened in the beginning, the 1st of March, 2009. So the financial crisis was already bottoming out.
Right.
Things were already starting to spring back. At the time, I had a radio show here in Atlanta. I did a radio program for 9 years and I doubled down on my communication and I was able to build more money. The thing that I always kind of point back to, and I correlate it now, is I made my personal fortune by helping other people make their fortune.
Nice.
And that's one of the quotes that I always tell people, and I can't credit it to anybody but my grandfather. My grandfather was an Army colonel, 32 years in the Army.
Wow.
And his favorite saying was, do good, do well by doing good, and be happy doing well, doing good.
Nice.
And that always stuck with me in everything I did in my business. And so from March 2009, it was probably a period of 4 or 5 months that it was hard.
Right.
You really have to. The other thing I would tell the listener is if you're running a P&L in your messy middle, anything below the top line or the cost of goods sold line, if it's $1 you spend, that dollar either has to get a client or keep a client.
Right.
If you're spending $1 and it doesn't get a client or keep a client, I would cut it. And I cut everything that I could cut, every subscription, everything that was not pointing back to either keeping a client or getting a client.
Right.
Simple advice. That's one of the first things we do with a client in the first 30 days is we will take a microscope and a blowtorch to the P&L.
I love it.
And you will see a lot of, and what happens when you cut that expense?
Right.
It just lifts the net profit immediately. It's a great thing.
So Phil, I'm not a finance guy. I am an operations guy at heart. I started my career in engineering. But on the engineering side, we took a very financial type approach. It's how do we build efficiency, which is a cost issue. And every organization I go in, I'm looking at how do we cut unnecessary costs, not cut costs for things that you need to build the business, but all the unnecessary. One company I joined, we were about a $70 million company at the time. And just on just one area, I cut about $300,000 almost immediately out of the budget that we didn't need. And I proved to the team that we could do better without having spending that money than otherwise. And it just kind of led to a bunch of other changes. But I'm very much similar to you. Let's cut.
That's absolutely right. So that was the story back in March 2009. Then the second thing you asked was kind of about the exits and the sales. So I'll get a little personal on this too. I had a heart attack in 2020, training for my 4th Ironman triathlon, and it really changed the way I looked at and viewed my business and the world, frankly, and my family. And then fall of 2020, so we were kind of on the end of the COVID crisis. Still, it was lingering on, but I had this heart attack in July, and by October, November, I got a call from a headhunting private equity firm. And their MO was to not open offices around the nation, but to buy offices and firms in metropolitan areas like Atlanta. Well, I had been fortunate enough to have the radio show for 9 years. I had a TV program on public TV for 3 years.
Nice.
So they had a lot of content on Phil Calandra.
Right.
And I said, I'm not really interested. We're doing fine. It was my wife and I. We had a team of about 6 at the point. Cash flow was good. Life was good, other than that I had a health scare.
Right.
But that health scare really kind of changed my perspective, my view on what was important about the money and about the business.
Right.
So I entered in these conversations, and it went round and round. We couldn't get on the agreement. We could get on agreement. Then we went through some due diligence. And then by April 1st of 2021, we sold to the single buyer, the insurance agency, and the registered investment advisory firm. I'm still an equity partner in that firm.
Right.
That's now approaching $12 billion.
Wow.
It blessed us immensely. But the thing that I learned most about that period of time, coming from 2009, bear market of 2018, and then even COVID, is the way I would say it is you always want to build a business that you love, that's prepped to sail tomorrow, but you choose never to do it.
Right.
So I had a business that I loved, and since we went through the shitstorm we did, it was prepped to sell. And then I had to personally, my wife and I kind of had to struggle with, is it time for us to become part of a bigger organization? And we did, and that's the rest of the story. And that, as many exits go, I can't disclose the amount.
Sure.
It's not important, the amount. It doesn't matter the amount. It's more than I could ever spend.
Right.
So it's work optional for us. We have a house in Florida. We live here in Atlanta. We love to travel. I can work remotely from wherever in the world I want to be. That was by design. But I also think to kind of close this loop is I'll work forever and I'll work on my terms. That's really what the freedom is about. How do we build better businesses so that we're in control? We do what we want, when we want, with who we want, and how we want, where we want.
You know, I hope that a lot of entrepreneurs hear that statement alone, because they want that kind of freedom, but they aren't doing some of the other pieces to get there, like you've described in the financial analysis. And that's a lot of times why they will not go work for a larger organization. So I'm hoping that they listen to this and really start to look at their foundation so they can make sure they have the freedom that they intend to have through their business and their operations, and they can continue to grow as a part of that journey.
Absolutely. And the other dangerous part, Ronnie, and you mentioned the 30 million self-employed small business owner in the United States. According to the Exit Planning Institute, only 30% will ever have a sale of their business.
Right.
So the worst thing you can say to yourself is, I'll deal with my financials. I'll deal with my financial net worth, my financial freedom when I have the exit. If you're saying that to yourself, please reconsider that. Because if only 30% of small businesses in the United States actually sell, that means there's a 70% chance that plane doesn't make it. And of the 30% that actually do sell, only 11% close for the money they thought they would get out of their baby, out of their business.
Right.
So if that's your
Right.
financial strategy, please take heed of that. That's a very dangerous position for a lot of people.
That's true. Now, Phil, you've had a pretty diverse career, it sounds like, from financial planning to television and radio. And then there's another part as well. You're a tough guy. You're an Iron Man type guy, which I admire a lot. What was it like training for an Iron Man?
Yeah, it started out as a, typical 5K hobby, and then it
Right.
kind of snowballed from there. I think the analogy that I give there, someone said to me one time, all of your endurance sports, athletics in general, it must build character. And I really think that it doesn't build character, it reveals character.
That's true.
So for me, it was the endurance mindset. It
Right.
was my ability to be comfortable doing something uncomfortable.
Right.
Whether that's running, whether that's swimming, biking, gymnastics, football, whatever, in athletics, it's a mindset to do uncomfortable things. And it taught me discipline, dedication, desire, and it was a great hobby that turned into a lifestyle. And then, of course, when I had the heart attack, the cardiologist kind of advised me not to. So now I just get to work out and walk with a weighted vest or things of that
Right,
nature.
right,
But
right.
I'm almost 60. So, I got to do something.
Right.
But I think that any sport, any athletics, any commitment that you make to yourself, whether it's going to the gym at 5 a.m., 6 a.m., 3-4 days a week, if you will make that commitment to yourself with dedication, with discipline, with desire, I think it made me a better man. It certainly made me a better father. It makes me a better business owner. It makes me a better person because I made that commitment.
Absolutely.
So that's why I did it. And that's why I love telling those stories. 3 Ironmans, 12 half Ironmans, and
Wow.
9 marathons.
I
So,
love it.
yeah. And I wasn't the fastest. I could assure you I was not the fastest,
Right.
but I did finish.
Right. And that's critical. I know I was a 7 Habits certified trainer, 7 Habits of Highly Effective People certified trainer. And one of the habits was sharpening the saw. So there was a big emphasis on doing those things like what you described in running the marathon to help keep us fresh and help keep us focused. It's amazing. People think you're more focused by being in the business only. But no, taking that time out to do something that helps to replenish that thought process and that physical process, and it serves as an outlet, is so important to being a better spouse and father and
100%.
business leader as well. So I appreciate you saying that.
Absolutely right. Absolutely.
Well, Phil, thank you. This has been delightful. I am hopeful that people will write a lot of notes when they're not driving from this program.
Yeah, and I will send you web links. You can post them in the show notes. I'll even give my email if anybody wants to reach out, if they have a question. Trish and I have a real purpose and a real passion for helping that entrepreneur founder live the life they imagined, as Henry David Thoreau eloquently said.
Absolutely. Well, thank you, Phil. And let's
Yeah.
definitely stay in contact.
You bet.
Make sure you send this episode to every friend that you can find. Every business owner across the entire country and throughout the world should see this episode and learn from Phil and read about his thoughts in his book and really understand the program that he's created. This has been extremely insightful. Thank you for joining us on the Business Decoded podcast with Ronnie Spellman, and be sure to tune in next time.
Stay ahead of the curve. Subscribe right now. We will see you at the next episode.